You have either found this video because you're frustrated with your RRSPs, or someone has given you some tips and told you that there are some secrets out there to be able to be a little bit more successful. Either way, we're going to teach you guys a little bit today about how RRSPs and LIRA funds can grow safely and securely very quickly. And I don't want to make this all boring because this is something we love to do. I'm Jon Simcoe, I'm Lion Properties, and I hope that you can get a lot of value from this video. I'm going to teach you guys a lot of exactly what I do with my own RRSP account, and it's something that if you want to do with yours, we can talk about that. So it is very important to note that this video is not for public consumption. So it is okay is if you want to share it with a friend, you want to get their opinion, you want to find out a little bit more about this, and you want a second opinion on it, go for it. Share it with them, but please do not go posting this to YouTube or anywhere else. I did this earlier and it got my Facebook ad account actually shut down. So the banks and other people do not all want you to know this information. This is, very dangerous for them as an industry, and we're going to get to that. But before I was able to get, the reputation that I have right now as an investor, I'm someone who was the Canadian Real Estate Wealth Award Magazine's Joint Venture Partner of the Year 2016 nominee. Did not win it, but was nominated for it, which is fantastic. I'm going to go back in time before my book, The Rent-to-Own Solution to Home Ownership, came out, before I was a published author, before winning multiple awards, some for raising capital for different real estate projects, others for rent-to-own deals. I do a lot of rent-to-own deals. Today, we're here to talk about RRSPs. It's really important to look at when you make an RRSP contribution, what are you really planning for? A lot of people are planning to retire. They're planning to use that money in their retirement. So it's typically used as an income. And the other thing that it can be is it can be used to leave a legacy. If there's enough of it there, you can set it up to donate to charities, to do things in your name even after you've passed. So, your memory can continue living. That's one other thing you can do. As well as you can also create lifestyle with an RSP and a LIRA. Today I want to focus on the income and the legacy side of things. So this involves how to grow your RRSP. So going back in the time, I was a new young guy and I had moved to the oil patch. I actually used to drive one of those haul trucks, and I was worked long hours all the time, and I had one rental property and I wanted to buy another. And I was getting some advice from my father, and he had said that I should go and max out my RSP contribution room. He said that I had the opportunity to buy previous years that I contributed space and that I could do so. And so I did. I worked hard at that oil job and I put a lot of different money away into the RSPs. I did max out my contribution room just like my father had said. So I actually took that money, I walked into the bank, and it's amazing what they say. Whenever you have a little bit of money inside an account, the bank teller will say, "Oh, maybe you should set up a meeting with a financial advisor." It's because they think that you might be able to do something with them. So I did just that, walked into the bank and got set up. And when I went and met with that financial advisor, or mutual fund salesperson would be another good word for it, I was confused a lot. I didn't know which direction to go. I had all these different ways that I could invest my money. In fact, while I was sitting in her office, she showed me a sheet just like this. And it totally boggled my mind. And I'm a math guy. Like, I absolutely love math, but what they show you will make no sense. Here we have based on 3-year standard deviation. Most people don't understand what standard deviation is to begin with, let alone what all these confusing numbers here, fund, index, group average. All it really looks like here is if you put 10 grand in at the start, at the end it turns to 86 grand, which would seem like a good return. But it just may not actually be. So one of the reasons that they want to sell you these mutual funds is because us as Canadians, we pay the most in mutual fund fees. There's no real reason for it. Maybe it's because we're just too darn polite to object to paying them. But we pay the highest mutual fund fees as well as other bank management fees as well. We pay the highest in the world per percentage. So, it's very important to say, like, what are we getting for what we're paying for? So while we're on the topic, and we'll get back to my story with the mutual fund salesperson, but speaking of mutual funds, what are some of the average returns of the top 10 mutual funds in Canada after fees? So this is what would create what I call a true return to the person's RRSP account. What is their average of the best funds in all of Canada? What are they earning? Think about that. Well, I'm going to give you the answer. After fees, the top 10 funds are paying between 6.1 and 6.35%. Now, that's according to a Money Sense magazine, and it is also, very common that most people are not in those top funds. You need to be very well connected. You need to have about $100,000 and up just to be able to have a meeting, maybe even $250,000. So these higher returns are not normally accessible to people normally. And the odds are very good that you just might be earning 1 to 3% after the fees. After fees, you might even be losing money. So it's important to take a look at your own statement. As of this January 2017, it is now law that mutual funds and other banking institutions need to disclose the fees that you're paying. They used to disguise them in crafty ways. Now they have to show them. So take a look and see what those fees are on your own mutual fund. You just might be shocked at how much you're actually losing out on. So this is an actual statement of when I went and bought some mutual funds at my meeting at my local bank. And it's really important to look here at the pink dot. These are the returns that I was actually earning. Hey, that's my statement. But I would like to share and really highlight one particular area. And these were the fantastic rate of loss of minus 33% and minus 16%. Those were the two funds that I was put into by the woman who sold me these funds. Now, the worst part is I was still charged fees on top of these losses. This was just absolutely horrible. And I was pulling my hair out, and I just realized there has to be a better way. I know some people are able to get ahead and some people are not. And what is the difference? There has to be a better way, because clearly what I was doing with the bank was not working. So I think it's important when we talk about what you do with an RSP and what you do with any type of capital, that it's worth understanding whether you're actually investing in something that's on paper or something that's a physical asset. So let's just look at a couple of the differences. So some of the paper assets could be a GIC. They'll guarantee you a return of about 1 or 2%. That'll never be enough to outpace inflation, but that's another topic. We got stocks are another paper asset, bonds, mutual funds get grouped into there as well, as a group of mutual funds, makes up a bit of the index. Now, here is gold, some physical assets, gold and silver, the actual physical asset, not just the certificate. That would be paper. We have bricks and mortar. We have a house. That is something real. It can be touched. Same thing with an apartment building. And another thing that people don't always think about is you can also invest in equipment that can be rented out, and it can also generate income as well. So it's another physical asset, something you can touch. So let's just shift gears here. Let's talk a little bit about mortgages. Now, mortgages are one of the most secure investments and some of the bread and butter of the banking industry. Now, the majority of banking money that is earned is from mortgage interest. And it's true, like you can go into the bank and you can get like a vehicle loan, and you do pay them usually a bit more than mortgage rate interest. But that vehicle loan or even a line of credit is fairly small in comparison to the volume of money that banks lend out for mortgages. Banks, they really like to do that because it's actually secured by a physical asset. The bank knows that physical assets are the right place to be securing their money. Now, it's possible that you can turn an RRSP into a mortgage. And these types of RRSP mortgages, 99.9% of them work out exactly as planned. And that's the same reason why banks invest in mortgages. It's because Canadians would rather go hungry than miss a mortgage payment. Yes, that's right. Canadians will not miss mortgage payments. They generally don't. They do everything they can to avoid missing a payment. So what happens if someone does miss the fail? Well, in that case, the bank or even the person whose RRSP account is being used as a mortgage, if they fail to make a payment, they actually get to foreclose and take the property. So if it doesn't work out, the bricks and the sticks and the stones can all be taken. So these RRSP mortgages, why are they kept such a secret? And a little bit of a hint to that, think about it. Why is it that this might be the very first time you've ever heard about this? Or if you heard about it before, there might not be a lot of information out there on it. Well, the answer is it's because the banking industry really doesn't want you to know that there's a way for you to be able to use your RRSP without paying them all the fees that they earn. That is one of their other ways that they generate most of their profits. And, they're always posting record earnings every year. So I don't know about you, but I'd rather my own money work hard for itself. And I'm not trying to make my banker rich per se. So there are a couple of ways that you can learn a little bit more about this. Other than this presentation, there's an excellent book called RRSP's Secret, and it's by Greg Habstritt. You can pick that one up at Amazon. They'll send it to you real quick. The other one is the RRSP Into Real Estate CD. That's one where I recorded it with Paul Blackhair. It's been my #1 selling CD of all CDs in my online store. So if you want to find that one, it's at lionopportunities.com. And then you can check out the learning store. You'll see it there. That's been another really big hit with people, and it goes over a lot of the main questions that someone would ask. So you can find those and pick up some extra study material. So let's look really quickly at how the structure works to be able to do an RRSP mortgage. So you, in this example, are going to be the account holder. And so you have the RRSP, it belongs to you, and maybe you're not happy with what you're getting at your current institution. So you learn a little bit about this and you say, you know what, I'm going to make a switch. And what that means is it actually means creating a self-directed RRSP account. Now, self-directed is really just there because it means that you make the decisions, not a manager at the bank. So that's the main difference. And one of the places that I like to use a lot is Olympia Trust. It's where I have all of my own personal experience in dealing with RRSPs. It's where my own are, and it's where many of my clients keep theirs as well. There's a few other institutions that do this as well, but it's not as common as it used to be. So the trustee actually holds the account, keeps it registered. The transfer is all done tax-free. It does not charge, it's not pulling out your RRSP, it's just transferring it over. So all of that is all good. So now that your money is at Olympia Trust, it's going to get referred to in a couple agreements that are drawn up by lawyers, and I'll get right to those agreements in a minute. So the lawyers are going to be able to secure your money with some actual brick and mortar. So a physical asset. So I have here a picture of a house. And in order to do that, you actually can't use your own funds for your own real estate deal. It's just one of those rules that the government has put in place. There's a whole bunch of reasons behind it. But if you're to secure it, you have to do it in someone else's property, and it can't be blood related. So you need to find an investor or someone who can borrow, someone who has some real estate, like a real estate deal or a project, and they can actually use your RRSPs. Now, there's different things. Because this is a mortgage, there are different terms, such as when is the RRSP account going to be paid back? How much interest is going to be charged to it? How much is it gonna cost? So those are all terms that are negotiated between the borrower and the lender. So that would be like between you and I, for example. We would come to an agreement. Most of these private mortgages are in the 5 to 8% ranges. Just to give you a kind of an example of what they go for. So this is the terms, and this is how it's structured. Now, Olympia Trust actually handles all of the payments. So they're going to automatically go into my account, the account that I use this when I put rents in. So rents go into the account. Olympia Trust takes that money, pays the mortgage with it, and it remains registered. So that all actually happens automatically after it's set up, because Olympia Trust follows the instructions that the lawyers put. And we're going to tell the lawyers exactly the terms that we negotiated, and they're going to put those all into the instructions. That's called the mortgage document, and that's what Olympia is going to follow when it comes to repaying the RRSP account, and that's how it's going to grow. One of the great reasons why I absolutely love RRSP mortgages, and it works the same for a registered retirement savings plan as it does for a LIRA, which is a locked-in retirement account, RESP, TFSAs, they all work with the same rules when it comes to creating mortgages with them. And I love it because you don't have to time the market. You don't need to watch out for highs and lows. It's really up to the real estate professional to be making good choices and good properties to invest in. They have to pay your RRSP account regardless of what's going on, which means that the amount and the rate that you get is the true rate of return you're going to receive. So there are no major fees with this. You are able to get a true return, which is exactly what you negotiated. You're getting what you were promised. You get what you expect. You cannot say that with the rest of the financial industry out there. So this is just one of those secrets that you can be earning the same return, whether the market's going up or down, does not matter. You are completely sheltered from it. And that's one of the whole reasons why I absolutely love this, is it's predictable growth. I know that the rate that my own RRSP is earning, it is actually going to achieve. I can forecast years into the future and actually know with a majorly high degree of certainty that I'm going to have that money when the time comes to pull it out. So you can do the same as well. You can also earn very predictable returns. This is what I'd call a set it and forget it strategy. Once the mortgage is set up, the payments just come into the account regularly. So just a very recap, there is very little to no risk when it comes to RRSP mortgage. It outperforms almost every other RRSP strategy out there, especially when you look at how certain it really is. And so you no longer need to dread opening your statements. I used to be afraid to open my account statements back when I was just starting out. Now I'm happy to. Olympia Trust sends those out automatically. It's not something that you need to worry about. There's no need to time the market. You don't need to use emotions to make your decisions. So my name is Jon Simcoe, and I really do invite you to get in touch with me. www.lionopportunities.com. There's a contact us section. You can email me directly, Jon@lionopportunities.com. That's Jon, Jon. feel free to reach out. Mention that you watched this video, and we can look into actually doing something with your RRSPs. For the real estate investors, stick around for part 2. I'm going to show you guys a little bit about what it's like on my side of things putting these deals together. For everyone else, thank you for joining me, and I hope to get in touch with you soon.